What's going on, YouTube? Jake Claver back at you again on the Block Biz. Thank y'all for joining me again. This one's going to be about using crypto as a write-off on your taxes. I've not heard anybody else even discuss this, but it's something that I'm going to be attempting to use this year. So, under Section 179 in the tax code, which is also heavy vehicles, or heavy equipment, anything over 6,000 pounds can be fully depreciated in the same year. Software is also listed in there. So if you have a business that is in the business of doing something that could potentially require blockchain in the future, you could purchase digital assets that might be required to operate in that system this year inside your business. And in doing so, you would be purchasing software that might appreciate in value because it's an asset. However, you would have the ability to write that purchase off as an expense on your taxes. And crypto is a very weird thing. Same thing with digital assets. This is an asset class that's not fully regulated here in the US. So there's a lot of questions around it. So this is not tax advice. Make sure that you speak with your CPA before doing this. And there's probably going to be many that won't do it. The gentleman that I work with manages the financials or DAOs. And I've mentioned this to him, and he seems to believe that it's a viable solution as long as you are in the business of. So I'll give you some examples. Imagine you are a money transmitter. You compete with Visa, PayPal, MasterCard. You process payments for businesses. Those people make fees on that. And you buy some XRP or some XLM because you believe that's what's going to be used in the future to facilitate those payments, send them over the rails, implement your business or integrate your business with distributed ledger technology. And you're purchasing those assets in order to be able to facilitate those payments for your customers, which you have. If they were to substantially increase in value on your balance sheet, they would be assets, and you would be able to write the purchase of them off in the current tax year. Just my thoughts again, not financial advice. Well, I guess I'll get the disclaimer out of the way. Nothing that I say here is financial advice. It's for entertainment and educational purposes only. Please consult your CPA, attorney, tax advisor, financial advisor before making any legal, tax, or financial decisions. We'll get on to the next one. Another example might be you own a logistics company or some kind of wholesale or retail physical item business. And one of the leaders that's in that category is VChain. They're already implemented in Walmarts across China. They use a QR code, tracks everything as an NFT on chain. Great. If you believe that was going to come here to the US, you might be able to purchase some VChain, maybe some VThor as the gas fees, and write that off this year on your taxes because you are purchasing it to use the software in the future. And you have to actually be wanting to implement this software into your business. It can't just be, oh, I'm buying it because it's an investment, but I can write it off as an expense. No, you really need to be trying to integrate this technology into your business, because if you do get audited, like, you're going to have problems. The other way that I've seen this currently exist is, I believe Bank of America holds their XRP and XLM, if they have both, on their balance sheet, but it's not listed out as an asset. Being a public company, I've looked at their balance sheet and they don't have it listed anywhere, but they're a Ripple partner and they use their technology. And I'd suspect, and I could be wrong, we'll see what happens, but I suspect that they have XRP in their possession, and it would be listed under software or another category that they don't have to disclose that specific asset on their balance sheet. as a public company. And I don't know, I'm sure their R&D department has many write-offs every single year for the development of new technologies in their financial business. So it would be pretty easy to purchase software as the financial instrument that you are going to use to facilitate value in the future because you are a money transmitter. Same thing with all these exchanges. Same thing with any other fiduciary that has purchased it. And again, we'll see how all of it shakes out. I'm doing this with some of my business owners that I work with, but it's an interesting concept that something that is not regulated could be used as the value transmission mechanism inside the software, and also a speculative asset or an asset that may appreciate in value over time. So just wanted to bring that one to you guys. I hope that brought you some insight. If you have any questions regarding that, please feel free to comment below, and we'll see y'all on the next one.